Welcome to the webinar, everyone. I'll get Vicky and Nick to do some introductions in a very short while. I'm Graham Crawshaw on behalf of CASME and the Hackett Group. Welcome to the webinar. And it's great. We were just chatting. I mean, Hackett and CASME, we've been working together now for 6 years, if I did the maths right. And it's great that we're able to support all our members with different webinars and giving you some insights as to what's going on. And even though as two organizations, we do things slightly differently, it's fascinating to see how very similar the data, the information that we've got to share. And that's why it's great to actually come together and be able to do these webinars for you. I look after all the procurement content at CASME. So I'm going to let Nick and Vicky do their quick introductions. So it's got to be ladies first. So Vicky, welcome.
Thank you very much, Graham. Thanks for having me back. My name is Vicky Kavan. I'm a procurement advisor here at the Hackett Group. So I work with multinational global companies, predominantly headquartered in UK, Europe, but more and more in Asia as well. So we support our executives there to really move forward through their maturity journeys. And Nick leads our team. Nick, do you want to say a few words?
Yeah, thanks, Vicky. Great introduction there. I think you've said it pretty much all. I'm also based here in England, and it's always a pleasure to be here, spend some time with the audience. We've got a jam-packed session again for you today. And as Vicky said, yeah, I lead our European advisory team. So thanks everyone for joining. Back to you, Graham.
Thank you. So we are recording this session. That recording will be made available to you, as will a copy of the slides. I know everyone always wants to know that. We have got the Q&A box. So if you've got any questions, put them in, and as time permits, at the end, the three of us will have a chat and incorporate any questions that you've got. Also, if you just want to make a comment, use the chat box just to make it as interactive as possible. At the end of the webinar, after 60 minutes, there will be a short survey that we ask you to complete, just so that we know whether we're on the right track, capture ideas for future webinars. Enough of that. Let's get on with the content of this webinar. And I think I'm handing over to Vicky for starting.
You are. And Graham, I thought you said put your questions into the chat box, and I wasn't sure if that was a preview of the next CASME development.
Yeah, probably was. Yeah, I was sort of getting all tongue-tied as well. But yeah, Q&A in the Q&A box, and we'll worry about a chat bot later.
Yeah, for the next one. Anyway, thank you. Thanks, Graham. So before I get into the detail of our model for working and thriving in these kind of environment, I really wanted to just set the scene for the discussion with a brief view of these 5 macro trends or disruptors. Now, inflation, recession, I'll come and talk to those in a moment on the next slide. We're going to get into a deep dive of the geopolitical turmoil a bit later on in the presentation with Nick as well. Shrinking worker supply. So this is really a continuation of a trend that we've seen for quite some time, with more and more workers leaving the workplace and then fewer of the young new workers entering the workforce. And we really saw a particular exodus just following COVID in what we were calling the Great Resignation. So ESG and sustainability, then the fifth on the screen, is really changing our business objectives. It's changing our decision-making processes, and it's also bringing in a whole host of new regulations. And this looks very really different at the moment by country or region. Now, when we view all of these kind of building blocks together at the same time, or when we combine them, it really results in a unique, complex landscape that hasn't existed at any point before. And for us in procurement, the key point here is that nobody else has the experience. Nobody else has already been through this and dealt with it. So it's really a case of kind of figuring out as we go along. There isn't, a a model that just predicts how each of these are going to change and impact us at any one time. There isn't a one-size-fits-all answer. So the Hackett framework that I'm going to take you through in a little while is set up, you know, for dealing with this uncertainty and helping us to prepare for, you know, the unexpected. So one other thing to note, when we are presenting this kind of content to our own procurement members, very, very few of us in procurement or in the audience have actually studied economics in the past. Now, my assumption is it's probably the same case for the salespeople that we're negotiating with. So, you know, it doesn't put us at a disadvantage. What it does mean is that a bit of research and a bit of preparation and some of this scenario planning really does go a long way. Thanks, Graham. Next slide, please. Thank you. So I'm not going to read this word for word. It will be in the presentation that CASME circulates after the event. But I do want to talk you through some of the main examples, these biggest trends that we've been seeing recently. And these are kind of some of the key ones that it's really good to understand if you are going to use these market conditions and the ongoing volatility of the market to your advantage. So each of the columns can be considered as you know, a different lens, I suppose. First, from a regional perspective, we've seen real economic weakness in Europe, and just recently we've had the UK finally joining in that official recession. We still have this ongoing elevated inflation, but it's been reducing, and we're significantly down on where we were a year or so ago. Now, North America remains much more resilient with ongoing government spending. Asia has a real range of different performances, and we've seen India as a real kind of standout, especially strong economic performance over months. And then if you talk to our colleagues in Latin America, they'll tell you that the high inflation conditions are just business as usual. We've also seen some real key differences by industry as well. So manufacturing has slowed down, definitely seen a reduction in demand. The services have remained strong or steady, and a few specific industries such as pharmaceuticals or defence have seen an uptick in demand as well. So hopefully some of you on the call recognise some of those. Then within procurement, we've seen category-specific trends as well, fluctuations across the various commodities. Shipping prices is a hot topic at the moment. Prices are up significantly with the disruptions and rerouting around the Red Sea. The direct categories are still battling with shortages, for example, key parts, semiconductors, some key chemicals now, and indirects probably mostly impacted by the labour rate, the salary growth rates, the shrinking worker supply that I've mentioned, and also ongoing record low levels of unemployment. So despite some major layoffs that we've seen in the news from big global organizations and ongoing restructuring announcements, the number of people being put out of work and available to work has remained very low. So in the other box, geopolitics, as I said, Nick's going to cover that a bit later on, and then the related energy volatility. China has had a negative growth for quite some time and has actually just picked back up slightly, so it's no longer inflationary. And one key point on this is, even if nothing in your category is coming from China or being sourced from a Chinese company, it's still important that we have one eye on what's going on in China and with their economy, because just the sheer scale of this market is going to have knock-on effects on a much wider geography, a much broader set of categories and parts than just those that we're getting directly from there. So I've rushed through that a little bit. Graham, I'm happy for you to open up the first poll if that's okay.
Absolutely right. Let's launch that for everyone. So we've got 3 polls in the session today, because that's a great way. We've got over 100 of you on the call, so we'll get some immediate benchmarking. Which factors continue to impact inflation for your organization? Really want to get a feel for what is the biggest challenge that you face. So you can have multiple answers. So we've got either the shortage of labor, increased production costs, the impact of fuel prices, which we've seen creeping up, the impact of energy prices on utilities, shortage of components, volatility as far as commodity prices are concerned, consumer demand impacts, or the impact of government legislation. So tick all those that do apply to your procurement situation, and let's get a feel for sort of where the priorities are based on this this group, which I know from the start you're all joining from different parts of the world, so it will give us a really good feel as to where issues are in terms of inflation and the impacts it has on your organization. Recognizing that, yeah, inflation is starting to come down and it's doing its job, but there are still some very serious issues that are affecting individuals. So I'll just give you a few more seconds to complete. We've got a range of different options, and we want to know the most impactful in terms of inflation for your organization. So just let you respond to that, and I'll share the results. So just waiting for that. I say we've got 116 on the call, so that's quite a good feel for what really is going on inflation as seen by procurement. And I think that's different. That's quite focused, as opposed to what you'd read in the press or what you are fed in terms of other news media. Let me end that poll and share the results. So just to remind you, because you've been able to enter more than one, you can't rely on the percentages. Look at the length of the bars. That's the most important. That gives you a real feel for what that is looking like. So I would interpret that as shortage of labor, increased production costs, and volatility in commodity prices, all being pretty equal. Then we've got to drop down, but I mean, they're all factors. And let's face it, we did choose them knowing that you would say they are all factors, but it's those that are the longest, which really sort of gives us cause for trying to understand what is going on. Nick, Vicky, any thoughts on that before I close that down?
Maybe just to come in there briefly, it's the volatility in commodity prices that's especially of interest to me. I've been watching markets. I've seen in recent weeks that iron ore prices come down significantly. I've seen oil creep up. I've seen copper blast off to the moon. And I'm kind of thinking myself, what's going to happen there, right? Because people are thinking, will prices go up, prices go down, will we have additional waves of inflation? But if oil was to creep up further, then that is closely correlated to higher inflation. So I'm very interested in that one. Just a quick comment from me there.
Yeah, no, thank you. That makes sense. Vicky?
Well, I was just going to say to Nick's point, actually, I mean, I'm cheating a little bit because I've got your next slide on my other screen. So I was just having a little comparison about how it compared to last time. So that volatility in commodity price, Nick, that you've just called out, which is kind of equal top, I'd say, in these numbers, that was a third, fourth place when you asked this same question before. So it's interesting to me that says it's kind of more of a focus now than it has been in the past.
Excellent. Well, let's put people out of their intrigue and share the next slide, which and it's great to look back and then sort of look forward. So I guess on the chart here, this is when we did Going for Gold 1, which was when we got together last June, when we were in the midst of double-digit inflation in so many parts of the world. We asked you, again, the same sort of questions. What were the top concerns for your organization? And I guess the chart on the right is when you've basically just done the same poll that you did within the Hackett members in February. Any more to add on that one?
Maybe just a last comment that, you know, the polling results there on the right-hand side, so this is Nick speaking, yeah, the polling results on the right-hand side have been broadly consistent. We've been regularly running that polling question throughout the last 6 months or so. So generally higher production costs, shortage of labor, higher labor prices have been, you know, very, very consistent. You know, higher oil price, higher energy prices, you know, feeding into utilities and oil and so on. So yeah, it's not really a surprise, and that's why I pointed out the bit around commodity prices that seem to have creeped up. So I just encourage everyone on the session just to keep an eye on that if you're, you know, sourcing anything that is traded on markets there, or that's a key input into the bill of materials, etc.
Okay, great, thanks. And in fact, if I then share the very specific CASME data that we've collected from our 240 members over the last few weeks, again, it confirms this labor cost. Inflation is just not going away when it comes to labor. I think we've got a combination of shortage of talent, getting the right people, and as that sort of flows into so many contracts, whether it's professional services, facilities management, this labor element seems to be more of an issue than it ever has been. The way this chart works, that the dark one, so the 63% of our members were saying, yeah, it's number 1 to 3 in terms of most impactful. You can then see as the chart goes down how that spread of concern is gradually sort of reduced. But I think any of us that are negotiating contracts that have got a very heavy or high labor content in them have got a challenge, and keeping that cost under control is a big cause for concern. Interesting, whether we're asking CASME members or Hackett members, essentially the data results are very, very similar, which actually is very reassuring. That it means we're asking the right questions, doing it in the right way, and everything is coming from procurement. I think that's the consistency with both organizations. If you weren't aware, we don't have sponsors or suppliers. This is all data from procurement professionals, which gives it that credibility.
I think, Graham, what you're just saying about the labour point, I think that's something that's maybe partly responsible for triggering the huge interest in generative AI and its possible capabilities there. So I think you might touch on that a little bit later on.
Yep.
Great. So I think you may have seen this model at the Going for Gold last year with Nick and Graham. Now, it's a very useful framework to go through to really identify where are your biggest risks, or potentially more and more now, where are your biggest opportunities. So, and then as an output, you can really use it to agree your so what, and you know, what can we do about this, and can we go and get, you know, decisions made or approved in advance in case of different eventualities. So on the previous slide that I went through, I covered a number of the different insights that you want to pull in at step 1. It's really important to understand what data is going to be needed for your category. For that, we're going to need the visibility into our supply base, into our suppliers. Where are they? Do we understand the cost model that makes up our categories? And, you know, maybe that's something you know because you've worked with it for a while. Maybe that's something you asked during your RFP process, or maybe that's coming in from a kind of a market intelligence source. Then as we move around, we need to assess really what are the greatest areas of potential impact, whether that's potential good impact or negative impact. And then analyze which of these different moving parts, which of these macro trends and movements is having an impact on which of your cost drivers. So then use this against you know, a few different scenarios. What does it mean for this cost base or this cost model if inflation shoots back up? What does it mean if we stay at in elevated levels for X amount of time? And then what does that really mean for your priority areas? So on this point, we really recommend that you focus your efforts. So if you can consider what does that potential impact look like overall, and then within each of the different scenarios, you can really focus your efforts and your plans onto those key spend areas or your key contracts. And then as we move round for step 3, you can take each of those scenarios and make those decisions up front. What will we do in each of these eventualities? It's, you know, often a little bit easier making those kind of decisions when you're not under extreme pressure. You haven't got the CFO on, you know, on the phone teamsing you. Now, what you might realize is you've got a pretty good deal, and actually, you know, in these scenarios or in 2 of these 3 scenarios, we would choose to do nothing with this given supplier, this given spend subcategory. But we still want to be prepared for when the supplier realizes we've got quite a good deal. You know, when they come to us asking for the next discount or a revamp of our cost model, you might want to consider enhancing your SRM activities with a given set of suppliers from a, you know, a kind of a risk mitigation perspective, or you might make changes to your current risk monitoring activities or approaches. So more and more now, I mean, hopefully you'll also be able to use these analyses to proactively reach out to suppliers, maybe claw back some of those price increases that you've been experiencing in recent years. But I think the important thing here is these aren't firm predictions, but it's really great to see the kind of the range of potential impact, and therefore the options that you have ahead of time. And we hear agility as a real point that's mentioned by a lot of companies at the moment. And actually, this is the kind of model that really does enable that agility within procurement. Thanks, Graham. Next slide, please.
Okay. Let me also give another update on the technique from a more of a CASME perspective from many of the events that we've held around the world. I really do get the sense that the balance of power is shifting to procurement. We've had all the crises, all the issues we've dealt with. We're all familiar with those. And there was nervousness as to whether the suppliers had the upper hand in terms of supply chain. But over the last, I would say 9 months, 6 to 9 months, and gradually been working around the world, procurement have got much more aggressive, much tougher with suppliers. And I think what we've seen is demanding transparency. So in terms of prices, suppliers will say, inflation, we're going to put the price up. That's not good enough. We need the full breakdown. Now, for direct materials, we accept most companies have got those much better locked down, understood, and cost base established. But for indirect, typically not. You don't have contracts linked to different commodity indices or different pricing indices that really help track the way prices ought to go. And so demanding that of your supplier is exactly what we have seen. We've also seen a flurry, a lot more activity where procurement is saying, look, we don't know whether our price is correct. We don't know whether it's distorted. We can't accurately do benchmarking because we don't know whether that's going to be an apples for apples comparison. So in that case, the only way you know whether you need to reset your pricing is actually to go to the market and actually go issue a tender, really see what that competitiveness is like from the supply base. So we have seen evidence of many organizations ramping up their RFP processes and really validating what prices should look like. And of course, using all the models such as should cost models, TCO, really trying to get a grip for what really should I be paying? Is the supplier trying to take advantage of inflation, put prices up unnecessarily? So going to the market helps to readjust that. So when we asked our members, what are you doing to mitigate inflation? No surprise that such a high number was saying, look, we're going to renegotiate contracts. We're not going to accept pricing. We're not just going to roll on contracts. That was the advice much earlier on during the last 5 years when there was that uncertainty. Now procurement is much more confident, much more likely to say, the only way I'm going to get the best, most competitive price is to renegotiate, really understand what the market can offer. A complete turnaround from where we were, which is just fascinating, and it keeps us on our toes, I guess. But yeah, don't let suppliers just use inflation as a justification for increasing prices. Don't just threaten to go to the market, actually do it. Reset your pricing, and that really is the approach that we're seeing right across the procurement function.
And I think on that point, Graham, if you're going in to renegotiate those contracts, it's another reason why it's so important to have done that scenario modeling, because if you're renegotiating based on the, as is today, well, that might be great for you today, but you need to have done the background work just in case, if things go in a different direction to what you currently expect, to make sure you're going to be covered then as well. And that's a nice segue, because this slide, answers that question, which is something we get asked a lot, which is, well, which scenarios should I be considering? So I think I mentioned before, and again, a key point is not to try to predict exactly what will happen, but to consider the kind of the what ifs and understand what each of those potential situations could look like. So, what we've got on the screen here, and again, you'll get it in the pack, so you can read through it in a little bit more detail, but we've tried to summarize some of the key features or characteristics of these different inflationary or deflationary scenarios, and we'd really encourage you to look at this and then also overlay it with what you know about your own industry. So what happened to your industry in the 70s and the 80s, or that kind of thing, or learn from some of our colleagues who, like I said, in LATAM have been dealing with this, as part of business as usual. Thanks, Graham.
Excellent. I wanted to add this slide in, and you may think, hang on, how does this sort of feature? But I think in all that we're doing, just get everything into perspective, that actually procurement does deliver a lot of value. It may seem that you're under immense pressure to get those costs down, to react to inflation and all the things that we've been talking about. But I like to get the balance right. I like to really ensure that, yeah, we are delivering a lot of value to the bidders, way beyond just cost savings. We do this survey every year, and just ask our members, look, what in addition to cost reduction are you also delivering? And actually, it's the first time that risk management has come in right at the top of the list. So we understand you've got all the challenges of dealing with the macroeconomic factors, inflation, all that we've been talking about, but also just balance it. This is often the area that your stakeholders will really understand and appreciate you talking, because you can't just talk about price. That isn't going to get their attention. What is that whole value proposition that you're able to deliver. So when we were putting this together, I thought, you know what, I did want to just get it balanced, to really make it clear that amongst all the pressures, it is the overall value that we deliver that actually makes procurement an amazing place to work, and why it is so important that we do what we do. So I wanted to get that into perspective. Back to you, Nick.
Yeah, thanks, Graham. Thanks, Vicky. So yeah, we've been talking cost modeling, we've been talking scenario planning, not necessarily trying to predict the future, but to think about likely scenarios, talking about using data to challenge suppliers if they're coming to you with a 50% price increase. But at the end of the day, you know, here at Hackett, we've been producing a monthly report around managing for inflation from a procurement, for a sourcing perspective now for a couple of years. And something that I've noticed in the last couple of months is that the volatility may seem to be receding a little bit, right? Some of the major trends on a month-to-month or a quarter-to-quarter basis seem to be settling down, right? So a lot of the economic or business indicators are now starting to move in the right direction, right? So we, you know, to Vicky's points earlier on, we're still seeing softness in Europe, we're still seeing strength in the US and North America, we're still seeing strength in parts of Asia and so on. But the trends don't necessarily seem to be changing. They're more complicated and they're more nuanced, right? So depending on which category we're managing, which part of the world we're sourcing from, whether it's the UK, Europe, or Asia or whatnot, we still need to understand which trends are in play. But while things have been slowing down, we've also been caught out by a number of new trends that happened at the end of last year, right? We had what happened in the Middle East, and of course that expanded and headed into shipping. And then as we've been working with clients at the end of last year and this year, one of the topics, right, geopolitics in terms of risks and opportunities seems to be bubbling up as a very significant topic for this year and potentially next year. All right, so we've got this slide here which highlights 8 or so different risks and opportunities, because we can't just have a story that's all bad news. Hopefully there's some better news hidden away in there. And so if I quickly run through these, then, you know, as part of that scenario planning, we can run a quick poll together to see, okay, from the audience, which of these geopolitical risks or opportunities are you or could you be most concerned about? And we can also share some external data there as well. But first up, number one is really around logistics and shipping. So of course, we've seen what's happening in the Suez Canal, as well as the Panama Canal, the Red Sea, right? The first bulk carrier carrying, I think, fertilizer was sunk, you know, went to the bottom of the ocean there earlier this month. But that's not the only potential choke points, right? So there's a number of other challenges in terms of shipping that we should be thinking about. There is a risk there in terms of asynchronous warfare. You basically have some rebels and some drones able to inflict some significant damage on shipping and distract, at the very least, right, some of the most powerful navies in the world there. So logistics and shipping, something to think about. Number two, we've got wars, right? This can be physical or kinetic wars, right? But it also could be cyber or information wars. There's a number of regional hotspots around the world. There's certainly tensions between NATO and Russia, Iran, China, and so on. And, you know, war, could that be a further concern? And we might want to think about what that could mean in terms of our supply chains, whether or not we're just sourcing onshore or if it's offshore. Do we really need to think about regionalizing and so on? Government elections is there at number 3. You might be thinking, well, how can that possibly be a geopolitical risk? Well, apparently there's 64 different government, presidential or general elections scheduled this year, and this is all around the world. So of course, we've got the big one in the USA, in November at the end of the year. 3 leading candidates there. Maybe it'll be Trump. Trump's already said, I'm going to introduce 10% tariffs on imports from Europe, anywhere between 10 and 100% tariffs on imports from China. Right, but there's also elections in many other parts of the world, right? The European Commission, Germany, Austria, Belgium, here in the UK, where some of us are, across Asia, so India, Pakistan, Indonesia as a couple of examples. There was elections in Russia over the weekend, and it seems like a lot of our politicians are less well liked these days. So we know that, so there may be a change in government. We also know that politicians would like to be re-elected, so often ahead of those elections, they do things like reduce taxes, offer some giveaways to make people feel better, to stimulate the economy and so on, right? So if people don't like their politicians, maybe there will be a change of government in many of these countries that may end up in a significant change in policy, new regulations and so on. But that point around politicians offering giveaways, right? If we're thinking about a recession this year in 2024, well, you know, it's in politicians' best interest to make sure that there is no recession. And that's one of the reasons why we're seeing such strength in the US economy, as one example where the government there is now spending approximately about 8% of GDP there. At number 4, we've got net zero and ESG. So different countries moving in different directions potentially here. So Europe is still very strong, pushing towards that 2030 agenda, net zero commitments in terms of our SBTIs and so on. But we see in terms of feedback from colleagues and other organizations we work with in North America that they are pushing back and challenging that. We're seeing other trends in terms of maybe a stronger push towards nuclear energy. People are also sort of looking at the price of energy, electricity these days and asking questions. So that's number 4. At number 5, when we're talking about higher energy prices, of course, we still have a cost of living crisis. So we talked about, hey, how inflation, whether or not it's PPI or CPI, has come down significantly. And many of the central banks are surprised how the rate of the increase in prices has slowed down. But in many cases, prices haven't actually fallen, right? So depending what you're buying, depending what you're sourcing or paying for, prices might be 10, 20, 30, even 50% higher than where they were back in 2018 or 2019, right? And that means certain things for labor forces. So different countries, different parts of the world, we're seeing especially public sector workers out on strike, right? We're also seeing farmers out on strike and disrupting things as well. North America, there was some talk also about truckers being on strike, right? And of course, AI and robotics may have an impact here. So that's our geopolitical risk or opportunity there at number 5. At number 6, in terms of a good news story, we have the rise of India as a superpower, right? So some large multinationals like Apple and others have looked at their experiences in recent years, have thought about resilience, and they've said, hey, their supply base, we want to move 25% of our sourcing demand, our sourcing spend to India, right? So some countries in the world have been benefiting from the challenges in supply chains, right? If we look at South Korea, if we look at Japan, if we look at Mexico, if we look at onshore USA as well as India, there's been a number of countries benefiting, right, from changes in supply chains in terms of, we're changing where we're sourcing from, new supply bases are built up and so on. There's still a big challenge with China, right? It still represents in many supply chains 70 to 80% of the market. So, redesigning supply chains there at number 7 is not as easy as people might think, right? We also see people talking about the development of new alliances, strategic and political. So, of course, you've got the G20, you've got expansion in terms of the BRICS alliance. So no longer is it just Brazil, Russia, India, China, and South Africa. There's, I think, anywhere between 5 or 10 companies that have, countries that have joined that alliance. And then, of course, we see what's happening with OPEC and that expanded group of companies, right? So OPEC themselves, I think the cuts in terms of oil supply or production are around about 2 million barrels per day, large part coming from Russia and Saudi Arabia, and that's set to continue into this year. And then at number 8, we've got commodity super cycle, right? So earlier on, when you were running that polling question and commodities started to score a bit higher, I was immediately thinking of this. So back in 2008 to 2010, when the global financial crisis hit, we saw a significant fall in many of the prices or the costs of traded commodities. But then as the recession developed and recovery developed, then there was a significant bounce back, a significant increase in the prices and the cost of many of these commodities. So at least something I'm on the lookout for is that point number 8, right? What is the potential for a recovery there in commodities? Because prices today are relatively low compared to, say, where they were in 2022 or in other decades. So maybe we could kick off the first or the second polling question around this topic, right? And the question really is for the audience here around, which geopolitical risks and opportunities are you most concerned about for procurement and supply chain? So if I could ask you to kindly pick your top 3 responses here. Now, just like before, we have some polling data to share back with you, but there's just over 100 people, 110 people odd on the session now. We're very interested in what you think in terms of geopolitical risks or opportunities. I do see it as a significant topic for us. this year, but I also recognize it's not something that we necessarily used to think about a lot until recently, right? Pandemic, war, lockdowns, shortages, scarcity, and so on. We've been through a lot. So I'm interested to see what people are thinking, and then hopefully you'll also be interested to get the feedback in terms of what other folks on the session today are thinking as well.
So just a reminder, in terms of
Sorry.
the other, please use the chat to put in anything that you think that we've missed or should have been included in the poll, which was limited by the constraints of Zoom.
Thanks, Graham. Yes, we've got the 10 limit there. I mean, there's all sorts of different scenarios people could think about, right? There's some I haven't mentioned there. I didn't necessarily want to call out any specific countries or regions of the world specifically. I just wanted to keep it at a higher level. And again, you know, when you're thinking about your scenarios, as Vicky was talking about, you know, what are your sourcing? Where are your suppliers located? What does the supply chain look like? So, you know, if it is logistics and shipping disruption that you're thinking about, well, you just need to think, well, okay, of my supply chains, where are the potential choke points? Where are the potential disruption points? You know, similar for war or some of these other points, right? Net zero and so on.
Okay, let's share the results. And once again, because you've been able to enter more than one, don't rely on the percentage, just look at the length of the bars, which make it very clear. Government elections and all that goes with that sort of policy change is very much the leader there, followed by logistics, shipping disruption, and then I guess war. And then followed there, I guess it goes down to net zero. I know we've had a couple of comments or additionals. The US federal fund rate increases a concern, but I guess India doesn't seem to be too much of a concern. And contrary to what we were saying earlier, the commodities is actually quite low down. Now, I know we only gave you 3 options, so maybe that's a factor, or maybe the view, as you said, Nick, it's going to be another couple of years away. Maybe it's too far into the future. We've got some really shorter term concerns that is impacting procurement and supply chain at the moment.
I completely agree. Maybe if you move forward to just the external perspective.
Okay, let me stop sharing our live poll, and yeah, gosh, better explain this one, Nick.
Oh, yes. So in terms of when you're thinking about those risks, right? I'm sharing some data here in terms of risk management, right? So one of our supply risk studies. So what you can see here is, you know, the percentage of teams, you know, adopting some of these different supply risk management practices, and whether or not you're a manufacturing organization on the left-hand side or a services organization on the right-hand side. But if I just focus on a couple of these, you can see when we're thinking about risk, we're thinking about some of those geopolitical risks. You know, what are we most doing with suppliers, right? So in terms of supplier performance management or improvement, right? Part of our regular buyer-supplier quarterly review meetings or business review meetings, right? Do we have SLAs and KPIs in our contracts? Do we discuss supplier performance on a regular basis? What's on the agenda? Do we have things like risk? Are we asking them, hey, inflation, how are you being impacted? Geopolitics, what are you thinking about? The stuff that's happening in terms of wars and shipping disruption, how are you being disrupted today? Right? If there are impacts in terms of quality or performance, then putting them on a corrective action plan and making sure that we follow that up to drive improvement. That's, you know, the number one here. Almost 80% of respondents calling that out. In second place, in terms of suppliers' impact on brand and reputation, well, we have things like policy, like procedures, like a supplier code of conduct, right? Maybe we're bringing in external information about how that supplier is particularly rated, or maybe it's a specific industry that we're concerned about, right? So it's manufacturing, sometimes it's conflict minerals in certain parts of the world, right? If it's apparel or clothing or whatnot, then, you know, an industry like that is renowned for having specific modern slavery or child labor risk characteristics. So we're, you know, focusing in on there with a very sharp focus. Maybe some other points here in the middle of the page there. I'm just looking at the manufacturing, supply chain mapping, or the supply multi-sourcing. So just more than half saying, at least for our most critical supply chains, we're very interested to go deeper, right? To understand who are the suppliers to our suppliers, what are the critical points of weakness, convergence, potential failure across those supply chains. Of course, it's still a challenge to get visibility, to get that information about that. And then what is it? The fifth one down in terms of supply and multi-sourcing. So these days we should be doing much more than just qualifying alternate or backup suppliers, right? We should be already looking to send them some sourcing demand, to test them out, to try it out. If there's anything that we've learned over the last 3 or 4 years, is that we can't just have an alternate supplier on the books, right? They'll have their own customers, and we can't expect to go to a supplier that we've never really worked with before and say, hey, well, we've always had you as a backup supplier for the last 5 years. Sorry, we haven't bought anything with you yet, but we'd like to place this order for $50 million. And then we'll wonder why they respond and say, sorry, we have no capacity. Right. I just wanted to run through some of that quickly to share some of those perspectives with you. But again, as Vicky was saying, there's a lot of information, there's a lot of detail here. You can look at it when you receive the slides afterwards. The third poll really wanted to run with folks today is this one here. And again, it's the idea of looking ahead, right? And asking you to think about, from that scenario perspective, if you think about the economy, if you think about what might happen, you know, in your market that you're sourcing, what do you think is more likely, right? If you look ahead the next 1 to 2 years, the next 12 to 24 months. So it's multiple choice. You can pick as many or as few of the options here. Maybe if I just explain. So first up, we've got hard landing as an option, right? So a significant recession, a bit like 2008 or 2020. So we come down quick and then we bounce back up, right? I think this was very broadly expected last year, and a bit of a surprise perhaps for some that it didn't happen. At number 2, we've got deflationary conditions, right? So this is price level increases, not only slowing the increases, but going negative. So the overall price level falls, right? So in recent months in the China market, from a CPI perspective, we've seen negative CPI. And then from a European perspective, we've seen negative PPI in recent months as well. So that's the second one around deflationary. Soft landing is, you know, a U-shaped slowdown or a recession. So we're coming down slowly, gradual bottom, and then the economy picks up again. Not as strong or as deep as the hard landing option, right? Maybe we don't even get a recession, but we just have that slowdown, right? No landing is maybe we've seen the bottom. It's all up from here, right? For anyone who heard the announcement from Chairman Powell, US Federal Reserve, my evening yesterday, he had upgraded the growth forecast for the USA to 2%, right? Just reflecting the growth, the strength in the economy there. So no landing is the fourth one. The fifth one is stagflation, right? So let me explain this one a little bit. So for this one, we're thinking about an extended low growth period, right? Below trend period of growth, right? Long drawn out, bumping along, right? Inflation is higher, rates stay higher for longer, right? We may not have that deep recession, but things just feel, you know, slow and softer for a couple of years. And then in terms of some of the different things to mix things up, right? Maybe will we have additional waves of increasing inflation, right? So in that period, 1970s to 1985, we had one big wave of inflation, and we almost got back to normal, and then it took off again, and we had another wave of inflation. And I think into the mid-80s, there was a third wave of inflation. So I'm just interested if people think we might be facing that sort of scenario ahead. And then second to last, we've got continued fiscal stimulus, you know, government budget spending, like we're seeing in Europe, like we're seeing in the UK, like we're seeing especially in the US, right? And of course, in some parts of the world, there's massive construction or real estate projects going on, right? If you look at the Middle East, there's that big, is it called the neon? The neon? The big, long, thin, drawn-out construction that seems to be spanning something like, is it 150 kilometers or something like that? And the last point there is around significant geopolitical shocks, right? So we just explored that in the previous poll, whether or not that's, you know, war, elections, or logistics disruption to supply chains. So again, multiple choice, pick as many or as few as you'd like. And I'm very interested to see what people come back with here.
Well, thanks for all those explanations, because it's quite a complex poll, so I think it needed that, and I could see it took a few of you to little time to respond to that. Let's, in the interest of time, now end that poll and share the results. So once again, because you could respond to more than one, ignore the percentages, but look at the length of the bar there. Significant political shock seems to be by far the longest. Followed then by pretty much equal the soft landing and the stagflation, then followed the waves of increasing inflation. So we hope we don't get that one. And then some of the others quite a lot less. Is that what you expected, Nick and Vicky? Have you any other experience as to what you were anticipating from everyone?
Well, I think the mood of business, the mood of everyone has hopefully improved a bit since where we were last year. So the idea of a hard landing, it's encouraging to see that the number of people sort of picking that as an option is falling, right? So I think, Vicky, you made the point, hey, if we're not already interacting with suppliers very aggressively to try and bring down prices, but also, support other business goals like performance, quality, innovation, and what, that when we absolutely should be doing that, right? Because if you look at this polling, that big, deep, nasty recession might not actually be coming after all. I mean, we're seeing softness in Europe, of course. Soft landing, stagflation. We ran an event last week, our spring forum event for procurement practitioners. There's about 30 different companies in the room, and this was one question that we did ask. And I think there was just a couple of people thinking deflationary conditions, and that seems to match up here. What people seem to be more enamored with, shall I say, was the idea of stagflation, right? So a low, long, slow, drawn out type of recession. I'm not going to disagree with anyone calling out further significant geopolitical shocks. Fully expect that. I'm interested in people scoring so few just on the fiscal stimulus, the deficit spending. So again, there's no right or wrong answer here. It's just an opportunity to understand what other people think, right? And again, it's going to vary. Which part of the world are you from? Have you thought about this, deeply before, and so on, right? But thanks, folks, for taking the time, right? Because again, like you said, Graham, it's not an easy question to answer.
I think the only thing I'd add on that, Nick, is that over the last 3 or so years, when we've been asking what people are expecting, they've generally always been a little bit more positive than what's actually panned out, though.
Oh, Vicky, you may be right, but we're trying to end on a high here.
Well, that's why you've got the AI slide, Graham.
Yeah, definitely. So let's, in the interest of time, we can't have a presentation nowadays without some reference to AI, because is it the answer to the labor shortages that we've spoken about? Not sure. We've been doing a lot of work at CASME on this, and I must admit, it's a challenging one. I think, in summary, there is a lot of hype coming from many suppliers of AI systems. I think people are quite nervous. There's issues around data and security and incorrect information coming out of the AI system. So yeah, still some issues there. But nevertheless, procurement, we're starting to look at it. We're trying to see how it really can help. And top of the list of investments are chatbots. Quite easy, less expensive to implement, and providing you get it right, providing you can support a chatbot with a human at some point, it can be a great way of doing some guided buying for your stakeholders. For those that don't invest directly, but use AI modules that are typically within the large ERP systems that procurement's using, then there it's slightly different. With that one, we're seeing the spend analytics coming through. Now, arguably, you may say this is a bit tactical, but equally, AI gives a great opportunity to process all of that data, clean it up, actually give you a nice story and information to present to your stakeholders. Will this resolve your labor issues? Probably not, but definitely worth just keeping in mind that in general, procurement is trying to see through the hype, but also investigating and really seeing what value some of the AI can deliver. It's certainly not going to go away. I think that's the main message there. Our final slide is really just trying to summarize everything that's going on in procurement. And let's face it, there is a lot that we're constantly trying to juggle. We are getting more insights. We're able to use the intelligence, whether it's come from AI or any other source, to really help have those conversations with the business, get procurement aligned with what we are trying to deliver. And actually having that knowledge really does help in terms of negotiating with suppliers and then working with your stakeholders. We've talked about the value of still carrying out supplier relationship management, connecting with your suppliers, really working closely with them. Is it going to be volatile? Well, I think the results that you've shown are it's far from stable. We really just don't quite know what's around the corner. But if you're prepared, if you're organized, if you're able to have those negotiations with all that information, then yeah, it definitely helps. There's a lot going on. Technology, will it help us? Well, you've got to make it help your own situation. So testing out some of the AI, really help that, get that so that it can help with your negotiations. So a lot going on. I don't know if you, Nick, Vicky, got anything to add to that, looking forward. And we'll be going for goal 3 this time next year, I guess.
I
Vicky, last
just add
comments?
one
Yeah.
thing on the AI point is I completely agree with you. It's not going to solve all of our labour issues, definitely not. But what I do think is a really interesting topic here is looking at some of the indirect or the labour driven indirect categories, you know, BPO, professional services and so on, and actually leaning on those suppliers to see what advances they're making in the AI and the Gen AI space. Because I expect if it's you know, directly related to your revenue generating capabilities, it's worth investing a little bit more at this stage than if it's just helping us with some of our admin in procurement.
Final word, Nick?
Well, geopolitics didn't let me down today. I think there was pretty resounding feedback from folks that that's something that they're concerned about. So that's, if I dare say, that's encouraging to see. I'd just like to, we're heading up on time. I'd just like to thank everyone who attended. Thank you always for taking the time to complete and fill in the polls, right? I really do appreciate that. And I realize some of the questions that I pose in the polling are a little bit challenging. We're a little bit outside of the normal frame for procurement, but for us as external folks working with a lot of people in the industry, you know, we're always interested to help people think about the most prickly questions and coach and guide as best we can. So thanks, folks, for taking the time to join us today.
Excellent. So Vicky, Nick, thank you for contributing to this webinar. We will send the quick survey at the end of this. Please take 10 seconds just to give us some feedback. But until then, thank you all for participating, and we look forward to seeing you at our 3rd Going for Coal webinar this time next year. Until then, all the best. Thank you for joining. Goodbye.